Here to talk about bank closures and what in the heck is going on out there. So, Alex, the news over the weekend, some bank closures, some problems there. What can you tell us about those banks that closed and what made them different than us? Why is that happening to them but not us at this point?
Yeah, so that's a good question. So one of the biggest things that's different between them and us is what we've already kind of talked about is that they had a significant amount of depositors that had uninsured deposits into the financial institution or the bank. And this the same theme is throughout the whole, all three of those large deposit bases with large depositors. 10% of the deposits were insured under the $250,000. 90% was above the $250,000. For us as an organization, we only have 3% that actually has a lot above the $250,000. So that's number one thing of what makes us completely different from what those financial institutions were doing.
So, if they have these large depositors that have large balances above and beyond the FDIC limits, and then all of a sudden these people, those depositors wanted their money back. Why? Why did they all together as a big group decide they wanted their money back?
Yeah. So what had happened, specific to Silicon Valley out in California, there was a lot of venture capital money in there. So what that means is a lot of startup businesses like Airbnb, a lot of those types of businesses that had large deposits there, and that community, they all really know each other pretty well. So what happened is early last week there was some communication that was sent out about how the bank was struggling, and word got out in that community that they were struggling and that they had significant loss that was unrealized in their investment portfolio. Once word got out, everyone decided they needed to go pull their money out, and 25% of their deposits were withdrawn in one day. So imagine us as a financial institution, we're $200 million in assets. If $50 million walked in the door tomorrow to be withdrawn from our bank or from our credit union, that's exactly what happened there. 25% was looking to be withdrawn overnight.
So their depositors became really uneasy because of their investment portfolio.
Correct.
So could that happen to us? How is our investment portfolio or the loans we make significantly different than Silicon Valley's?
Yeah, so Silicon Valley, we talk about how we have significant growth that we've had over the last 2 years. Silicon Valley has had what we've had on steroids. So they went from like 100 billion in assets to 200 billion in assets, which is a massive increase. Now we've gone from 120 million to 200 million, which is still almost double, but they went from 100 billion to 200 billion and they had to do something with that money. That's why they say to diversify your portfolios, and that's in personal finances, investments, diversify portfolio. Same thing with us as an institution. We have a few different areas that we invest in, whether that's CDs or treasuries or mortgage-backed securities, and we're not too heavy in any one in case something like that happens. We have the ability to get out.
So it doesn't sound like there's any real similarities between Forest Area and Silicon Valley. And we're talking about three banks over the weekend versus tens of thousands of banks and credit unions nationwide. So
Right.
What are the analysts saying? Is this going to be a smaller, isolated problem as far as financial institutions go?
Yeah, that's a good question. And if you're looking at the stock market right now, you can see that there are a number of banks that are tumbling in terms of their shares and where the stock price is on it. Well, to be seen. Like I said before, I really think that credit unions are going to come out okay. Are there going to be bumps in the road? There absolutely will. We're going to have to figure out what that looks like for us. If there's going to be any direct impact. As of today, it doesn't sound like there's been a whole lot. Still too early to tell, but we are monitoring it day by day, hour by hour at this point to figure out what the next steps are for us as an organization in terms of making sure that our members are taken care of.
Right. So we've got three banks right now. This caused, and they were significant. So they've caused a lot of talk. People are going to continue to talk about this and think about that.
So our numbers still look solid, even if we were to take the same hit that they took on their investment portfolio.
Anything else to add on the topic for today?
Yeah, I think we haven't really heard a whole lot up here in northern Michigan from our members, but this is a pretty big deal when it comes to the nation, and that's why the federal government stepped in the way that they did to make sure that there was no losses on any of the depositors' standpoint. The FDIC, the insurance fund, is actually going to cover that. It's not going to come out of the taxpayers' pockets to cover that. I mean, anything above the 250K, it's coming right out of the banks. insurance fund. And just to be clear, this is the second and third largest bank failure ever. So this is a big deal. That's why it is important for us to communicate with everyone of what's going on, but as well, just keep our eye on it. So
Perfect.
Yeah.
Well, thank you everybody for listening. But we hope that that's helpful. And again, reach out if we can be supportive in any way for you and your members. Thank you.
everyone.